Hello everybody, this is Toni Turner and welcome to the market now as of about 10:30 a.m. Eastern on Friday, August the 5th. U.S. employment increased more than expected in July and wages picked up, which bolstered the market's expectations of an acceleration in economic growth and raised the possibility of a Federal Reserve interest rate hike this year. The Labor Department reported this morning that non-farm payrolls rose by 255,000 jobs last month. The unemployment rate was unchanged at 4.9% as more people entered the labor market, so that's all good news. Highlighting labor market strength, average hourly wages increased a healthy 8 cents, and May's payrolls were revised up to 24,000 from the previously reported 11,000. After today's data, futures contracts showed traders still saw less than even odds of a rate hike this year, but close to even odds of such a move by 2017. And with that good news, let's move into our first chart that may give us some insight into the week to come. We usually look at a daily chart of the S&P 500 SPDR, the SPY. Of course, the SPY is the exchange-traded fund that closely follows our S&P 500 index. Today we're looking at a weekly chart. It's the end of the week. It's apropos, and many times it's very beneficial to look at longer-term charts than daily charts so we can see what's been going on and how the market is acting relative to the past. So as we look at our S&P 500 SPY SPDR today, as I capture this chart, you can see the SPY was trading at $217.83 or about $21.78 for the S&P 500 itself. Actually, right now we're at an all-time high once again, something we've been doing quite often for the past few weeks, and we're at it again, so that's good news. That's promising news. As we can see here, the SPY is trading above its 14-week moving average. Excuse me, if we look down at the 14-week RSI, we see that it is still beneath the 70 line. The 70 line on the RSI scale, if an asset is trading over that, it tells us it's in overbought territory. But the SPY is not there yet on this weekly chart, and that's good news. That's good news. If we look at the MACD, the Moving Average Convergence Divergence Oscillator, say that fast 3 times, this is also good news. We see the MACD line, the black line, is heading higher, and the red line, the signal line, is moving right underneath it, and that's textbook perfect, so let's just hope it stays there. Of course, the lines are above the 0 line, which is positive as well. Now, what we need to see here, we're coming into the end of the bulk of earnings season. What we need now is good news in the coming week to keep this uptrend that we have since the lows back in January and February of this year. We need this uptrend to continue, and to have that happen, we're going to need good news, good economic news of some kind. So let's hope that that comes about, but right now everything is good. Would I buy a lot of stock here? Me, probably not, because I'm not wild about buying at new highs, but still the market looks nice here, and that's good news. Now we wait and see which turn it's going to take next. Our next chart is the PowerShares QQQ, symbol QQQ, as you all know. This is the ETF that closely follows our NASDAQ 100 index that's made up of the top non-financial stocks in the NASDAQ stock market. The QQQ, when I captured this chart, was trading at $116.92, also a very happy camper today. You can ignore this line here from this last week. I believe that was what we call a bad tick. If we look at this chart, this daily chart, we see the Qs are trading above their rising 20-day moving average, rising 50-day moving average, and underneath as well the 200-day moving average. These are all simple moving averages, and they're looking very good. If there's a problem here, the problem is that the QQQs are overbought. If you could see the number here, you would see that the RSI is, that's a little funny looking, but that's supposed to be a 70 right there. The RSI is trading above the 70 line, so it is overbought. That means that on any bad news, it could succumb to profit taking, which it probably will. And that's a good thing, and that's a healthy thing. Markets need to come down in order to start back up. The Qs are up mainly this morning on Priceline's earnings report, which gapped that stock up quite a bit higher this morning. If we look down at excuse me, at the MACD, we see that the lines are coming together. This usually indicates, when the MACD line and the signal line come together, this usually indicates a little weakening in price. I know it doesn't look like it here, but we will keep an eye on the MACD indicator. It's a trend following indicator. It moves slowly, but sometimes if it goes into a bearish divergence, it's something we want to keep an eye on. So for right now, the Qs, the NASDAQ, they're going to need, just like the SPY, they're going to need good news into the rest of August in order to maintain this uptrend. I'd be careful here. I'd be tightening my stops on my tech stocks here, on my big momentum stocks, just as a matter of good risk management. Okay, our next chart here that we haven't looked at in a while is the KIE. This is the insurance ETF. The KIE has 47 holdings. The top components are Principal Financial Group, Cincinnati Financial, Everest Real Estate, AIG, Aflac. The May high here, right here, we had the May high. This was the all-time high right here. It came in at $73.36. Then on the Brexit news, the KIE fell down to 66.23, jumped back up dramatically, back up to, it rebounded back up, and now it's hanging out at $72.47 when I captured it. As you can see, it's sitting just atop its rising 20-day moving average, not far from its 50-day moving average, which is moving horizontally, and just above its 200-day moving average. Now, I chose the KIE because at some point here, it's apparent that the Fed will probably raise interest rates. At least the market's looking forward to that, and the dollar moved higher this morning on the good data, on the good jobs numbers. So insurance companies like a little higher interest rates. They're happier that way. And so I'm looking at the KIE here, possibly seeing if it can break out of this sideways consolidation after this move down. If it can break out of this sideways consolidation in this market and then maybe move up to 73. And if it can do that, maybe it can move up into all-time highs, which it's been trading kind of sideways for a long time because of low interest rates. But if interest rates start to rise at all, potentially KIE could move up over 73 and then move into blue sky and blue skies, and then potentially start another uptrend. So we'll have to see if that can happen here. The KIE does not have enough shares per day in it, average daily volume, for you to day trade it. It's something more of a buy and hold. I like the KIE as long as it stays above its 50-day moving average. And the 50-day moving average comes in here at the moment at $71.31. I will not be so inclined to want it or keep it if it moves below the 50-day moving average. Just keeping an eye on it here in the coming week to see if it can get a move upward. Okay, so now we'll go on to the coming week's economic reports. But first, please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and yes, make more money. So please join us. For those who cannot attend the live session, no problem. The session recording is available to all of our members just a few minutes after our session ends. And now for the coming week's economic reports. We are moving, as I said before, into the tail end of earnings season, and the number of reports will begin to taper off this coming week. As well, the coming week is very light on earnings reports. No earnings reports of any note on Monday or Tuesday. Wednesday we have the JOLTS, job openings, and crude inventories. Thursday we have jobless claims and natural gas inventories. Friday we have the producer price index, retail sales, and Michigan sentiment. Again, please join us for Tony's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.